After studying this module, you shall be able to know what is IFRS, know about the reorganization of IASC to IASB, learn difference between various components of IASB, get to know about the scope of IFRS. As we have seen in the last module, harmonization of accounts, that there was a need felt for aligning the accounting practices followed across the world. The whole process began in 1950s when there was rapid growth of international trade and foreign direct investment, and companies began to expand their reach beyond their borders. Leaders of the accounting profession from around the world felt international as the new challenge. Professional accounting body of United States, the American Institute of Certified Public Accountants, hosted the 8th International Congress of Accountants in September 1962 in New York City with the theme on accounting and auditing in the world economy. In less than 2 years, by 1964, IACPA published first volume of professional accounting, which was a summary to the accounting, auditing and professional standards around the world. The new form of business organization called multinational companies serve as a demarcation line between domestically oriented enterprises with international operations and truly world-oriented corporations. This internationalist trend heightened the desire to compare financial statements prepared in different countries. Sir Henry Benson, senior partner in the UK firm of Copper Brothers and Company, now part of PricewaterhouseCoopers, and resident of the Institute of Chartered Accountants in England and Wales, led a movement to tackle the issue of diverse accounting practices. Major breakthrough was achieved in 1966 when Benson persuaded the AICPA, the Canadian Institute of Chartered Accountants (CICA), the Institute of Chartered Accountant of Scotland and the Institute of Chartered Accountant in Ireland to join with ICAEW to form the Accountants International Study Group. The Institute of Chartered Accountants in Ireland to join with the ICAEW to form the Accountants International Study Group. The AISG issued a series of booklets that compared the accounting and auditing approaches in the US, Canada and the UK. Over a period of more than 10 years, the AISG issued 20 such booklets, which represented the first major effort to compare and contrast accounting and auditing practices across leading countries. The AISG booklets highlighted the diversity in practice among the three countries and therefore the non-comparability of financial statements across borders. This acted as a stepping stone in the formation of International Accounting Standard Committee. Now we will discuss upon the formation of IASC. The International Accounting Standard Committee was formed in 1973 through an agreement made by professional accountancy bodies from Australia, Germany, Mexico, Netherlands, United Kingdom and Ireland, Japan, Canada, France and the United States of America. Additional sponsoring members were also added in subsequent years, and in 1982 the sponsoring members of the IASC comprised all of the professional accountancy bodies that were members of the International Federation of Accountants. International Federation of Accountants (IFAC) is the global organization for the accountancy profession. Founded in 1977, IFAC has 175 members and associates in 130 countries and jurisdictions, representing more than 2.5 million accountants employed in public practice, industry and commerce, government and academic. The organization, through its independent standard setting boards, establishes international standards on ethics, auditing and assurance, accounting education and public sector accounting. Now we will discuss upon the major components of the IASC structure were. The first one, IASC board. The standard setting board of the IASC was known as the IASC board. The IASC board has 13 countries as members, and there were 3 more organizational members who were operating on a part-time and volunteer basis. Each member was represented by 2 representatives and 1 technical advisor. Although it was not true for each and every member. The individuals came from a wide range of backgrounds: accounting practice, business, particularly multinational business, financial analysis, accounting education, and national accounting standard setting. There were observers also on the board. Some of the observers were representative from IOSCO, FASB, and the European Commission. They participated in the debate but did not vote. The IASC board promulgated a substantial body of standards, interpretation, a conceptual framework, and other guidance that was adopted directly by many companies and that was looked to by many national accounting standard setters in developing national accounting standards. Second, Standing Interpretations Committee, SIC. SIC was responsible for giving interpretation for standards developed by IASP and invite public comments on the interpretations of standards subject to final approval by the IASC board. Now it has been restructured to IFR SIC. The third, Advisory Council. It is an oversight body despite its name. The Advisory Council functions more like the Board of Trustees of the current IFRS Foundation. Reorganization of IASE to IASP. After nearly 25 years of achievements, it was decided in 1997 in order to continue to perform its role effectively, it must find a way to bring about convergence between national accounting standards and practices and high quality global accounting standards. For this, it was felt that there is a need to change IASC structure. In late 1997, IASC formed a strategy working party to re-examine its strategy and structure. The report given by the Strategy Working Party in December 1998, it was in the form of a discussion paper. Final recommendations were published in November 1999 after taking into account the public comments. The IASC board approved the proposal unanimously in December 1999 and the IASC member bodies approved in May 2000. A new IASP constitution came into effect from 1 July 2000. The standard setting body was replaced as the International Accounting Standards Board. IASP was formed under a new International Accounting Standards Committee Foundation. In 2010, the IASC Foundation was replaced by IFRS Foundation. Accordingly, from 1st April 2001, the standard setting work of the IFRS Foundation was conducted by the International Accounting Standard Board. The IFRS Interpretation Committee replaced Standing Interpretation Committee. IFRS Interpretation Committee develops and solicits comments on interpretative guidance for applying standards promulgated by the IASP. These interpretations are only considered when IASP approves it. International Accounting Standard Board. Being founded on February 6, 2001 as an independent accounting standard setter, the IASP is a London-based organization which seeks out to set and enforce standard for accounting procedures. The International Accounting Standard Board was initially established as part of the International Accounting Standards Committee Foundation, now IFRS Foundation. The standards issued by International Accounting Standard Board, also known as International Financial Reporting Standards. Now we will discuss upon the objectives of the IASP. The objectives of the IASB are: first, to develop in the public interest a single set of high quality, understandable, enforceable and globally accepted financial reporting standards based on clearly articulated principles. These standards should require high quality, transparent and comparable information in financial statements and other financial reporting to help investors, other participants in the various capital markets of the world and other users of financial information make economic decisions. Second, to promote the use and rigorous application of those standards. Third, in fulfilling the above objectives, to take account as appropriate the needs of a range of sizes and types of entities in diverse economic settings. Fourth, to promote and facilitate the adoption of IFRS being the standards and interpretation issued by the IASB through the convergence of national accounting standards and IFRS. Now we will discuss upon the IASB framework. The International Accounting Standard Framework is the framework employed for the preparing and presenting financial statements. The IASB framework was approved by the IASC board in April 1989 and then adopted by the IASB in April 2001. The basic purpose of the IASB framework is to provide guidance and assistance to the IASB in developing new or revised standards in addition to assisting the preparers of financial statements in applying these standards and dealing with issues which are not explicitly dealt with by the standards. However, the framework does not have the force of a standard. Therefore, in case of a conflict between the framework and the standard, later would prevail over the former. The second discussion is on responsibility of IASB. Approval of international financial reporting standards and related documents such as the conceptual framework for financial reporting, exposure drafts and other discussion documents is the responsibility of the IASB. Now we will discuss upon the composition of IASB. The IASB comprises 16 full-time members. IFRS Interpretations Committee. The IFRS Interpretations Committee comprises 14 voting members and a non-voting chairman, all appointed by the trustees. The role of the committee is to prepare interpretations of IFRS for approval by the IASB and in the context of the conceptual framework to provide timely guidance on financial reporting issues. The International Financial Reporting Interpretations Committee replaced the former Standing Interpretation Committee in 2002. IFRS Advisory Council. The IFRS Advisory Council is appointed by the trustees. It provides a formal vehicle for participation by organizations and individuals with an interest in international financial reporting. The participants have diverse geographical and functional backgrounds. The council objective is to give advice to the International Accounting Standard Board on priorities, agenda decisions and on major standard setting projects. The next is governance of IFRS Foundation. The governance of the IFRS Foundation is the responsibility of 22 trustees. The trustees are not involved in any technical matters relating to the standards formulation and this responsibility is of the IASB. The trustees are accountable to the Monetary Board, a body of publicly accountable market authorities. Trustees are appointed for a renewable term of 3 years. Each trustee is expected to have an understanding of international issues relevant to the success of an international organization responsible for the development of high quality global accounting standards so that the financial statements give true and fair view. The next discussion is composition of trustees. 6 of the trustees must be selected from the Asia-Oceania region, 6 from Europe, 6 from North America, 1 from Africa, 1 from South America and 2 from the rest of the world. The trustees' responsibilities include: first, appointing the members of the IASP and associated councils and committees. Second, securing financing for the organization. The next is monitoring board. The monitoring board was created in January 2009 with the aim of providing a formal link between the trustees and public authorities in order to enhance the public accountability of the IFRS Foundation. The monetary board's main responsibilities are to ensure that the trustees continue to discharge their duties as defined by the IFRS Foundation Constitution, as well as approving the appointment or reappointment of trustees. The monitoring board should meet the trustees at least once a year or more often if appropriate. The monetary board consists of capital market authorities responsible for setting the form and content of financial reporting. Through the monitoring board, securities regulators that allow or require the use of IFRS in their jurisdiction will be able to more effectively carry out their mandates regarding investor protection, market integrity and capital formation. The current members of the monitoring board are representatives of the board and the Growth and Emerging Market Committee of the International Organization of Securities Commission, the European Commission, Financial Services Agency of Japan, US Securities and Exchange Commission, Brazilian Securities Commission and Financial Services Commission of Korea. The Basel Committee on Banking Supervision participates in the monitoring board as an observer. The monetary board carried out an independent review of the governance framework of the monitoring board and the IFRS Foundation in 2010 till 11. The governance review allowed the monitoring board to review inter alia its own structure, whether it provides appropriate representation for relevant authorities and whether the foundation's current governance structure functions effectively. Structure of IFRS Foundation. Constitution of IFRS Foundation has been revised from time to time. For the first time, a revised agreement and constitution was signed in November 1982. The constitution was further revised in October 1992 and May 2000 by the IASC board. Then in May 2000 constitution revision, there was a major breakthrough. The professional accountancy bodies adopted a mechanism enabling the appointing trustees to put the May 2000 constitution into force. The trustees activated the new constitution in January 2001, which led to the formation of International Accounting Standard Board and revised it in March 2002 again. At its meeting on 20 April 2001, the IASP passed the following resolution. First, all standards and interpretation issued under previous constitutions continue to be applicable unless and until they are amended or withdrawn. Second, the International Accounting Standard Board may amend or withdraw International Accounting Standard and SIC interpretation issued under previous constitutions of IASC as well as issue new standards and interpretations. Third, when the term IFRS is used, it includes standards and interpretations approved by the IASP and International Accounting Standards and SIC interpretations issued under various constitutions. Next, we will discuss upon the scope of IFRS. The IASP achieved its objectives primarily by developing and publishing IFRS and promoting the use of those standards in general purpose financial statements and other financial reporting. Other financial reporting comprises information provided outside financial statements that assist in the interpretation of a complete set of financial statements or improves user ability to make efficient economic decisions. In developing IFRS, the IASP works with national standard setters to promote and facilitate adoption of IFRS through convergence of National Accounting Standards and IFRS. IFRS set out recognition, measurement, presentation and disclosure requirements for the transactions and events that are important in general purpose financial statements. They may also set out specific requirements for transactions and events that are in particular industries. IFRS are based on the conceptual framework which addresses the concepts underlying the information presented in general purpose financial statements. Conceptual framework was developed from the previous framework for the preparation and presentation of financial statements, which the IASB adopted in 2001. The objective of the conceptual framework is to facilitate the consistent and logical formulation of IFRS. The conceptual framework also provides a basis for the use of judgment in resolving accounting issues. IFRS are designed to apply to the general purpose financial statements and other financial reporting of profit-oriented entities. Profit-oriented entities includes specifically those that are engaged in commercial, industrial and financial activities, whether organized in corporate or in other forms. They include organizations that provide dividend or other economic benefits directly and proportionately to their owners, members or participants. Although IFRS are not designed to apply to not-for-profit activities in the private sector, public sector or government, but entities with such activities may find them appropriate. The International Public Sector Accounting Standard Board, a special body, prepares accounting standards for government and other public sector entities other than government business entities based on IFRS. IFRS apply to all general purpose financial statements. Such financial statements are directed towards the common information needs of a wide range of users. For example, shareholders, creditors, employees and the public at large. Let us now summarize what we have discussed so far. In this module, we have learned the organizational structure of IFRS Foundation and the erstwhile International Accounting Standard Committee. We have also tried to understand the formation of IFRS Foundation. Now, it must be clear that formulation of a body like IFRS Foundation is not an easy task. The refined structure that we have today of IFRS is because of the continued commitment towards uniform accounting standards.